Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live rates and then we're going to talk about asset utilization loans. Great topic here for today. So, definitely exciting. Hope everybody had a great weekend and is ready to get back to it here this week. Appreciate everybody tuning in nice and early. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. I see some comments already coming in. Appreciate it. And it looks like we're live on all the different platforms, so we'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat about our loan topic here today. We'd be happy to answer the questions for you. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live rates, and then we do a deep dive into a different loan type. And today's loan type is going to be asset utilization loans or asset depletion, a few different names. Now, this is something we're very familiar with here at the Mortgage Calculator because we specialize in non-QM loans, and this is a popular one that we deal with. So we'll get into that here shortly, but before we do that, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and pull up today's pricing and see what it is looking
like. All right. So I'm going to go ahead and use my pricing tool. Some of the rates are popping up on our live rate sheet. So let me share my screen here. And we'll check out the live rates for today. It is June 3rd. Just after 11 a.m. Eastern. So we have our initial rate sheets we can share here. Go ahead and make it big. All right. So for our first example, as we do every day, we're going to set up our standard scenario that will compare across the different programs. So for all of the different scenarios, we'll use a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. And we'll have the computer look for the lowest rates we can offer. First, we'll do conforming conventional. Then we'll go into our FHA options, which is usually the second option for most borrowers. And since we're doing it live here, we won't do the VA or USDA, but then we'll check out our expanded guidelines where we have over 5,000 additional loan programs under our non-QM. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760, and an estimated debt to income ratio here of 40. So with these general settings, as we do every day, let's check out the basic scenario. So best option here at the top, 6.625 rate, 2.5 discount points and cost. Final APR, 6.929. So we're under 7 again. Great. Last week we creeped up over 7 for a bit there. And now we're back under 7, which is awesome. So for all of our borrowers looking for conventional, these are great options. But if for any reason our customer doesn't qualify for conventional, usually the next option we want to compare, we'll set up the same scenario. And we'll compare an FHA option. FHA allows more leniency on credit events, as well as a much higher debt to income ratio, but we'll keep everything identical here so we can compare apples to apples here across the program. So let's check out the FHA options. So best option here at the top, 5.875 rate, 2.25 discount points and cost, puts the final APR 6.804. So comparing that to conventional, if our customer qualifies for both, this one is actually just a touch cheaper if our customer qualifies for both. And this does include the upfront and yearly mortgage insurance that is required for FHA. So our customers that need to use it, definitely a great option, very comparable to conventional, and a little more leniency there on credit issues. Now, if for any reason our customer doesn't qualify for either FHA or conventional, typically most other banks or lenders may have to deny that customer. But that's where we love to present our 5,000 additional options under expanded guidelines. So we'll select expanded guidelines here for our next demo, which is also known as non-QM. We'll keep everything the same, but now we get our new option that pops up where we can change our income type. So if our customer doesn't qualify for conventional or FHA, those are full doc loans. That's 2 years of tax returns. So if our customer doesn't qualify with that, we need to use an alternative. We have all kinds of programs, asset related, Jose is going to go over today, business bank statement. The investor programs are just for investments. We'll show those in a second. Personal bank statement 12-month is what we'll use today. We also have RSU, stated income, VOE, 1099, P&L, all kinds of options. Most popular here, the 12-month bank statement option. And that's for our self-employed borrowers. When our self-employed borrowers apply, many times their taxes may have various write-offs and they may not make enough income at all, or just may need a little bit of extra help to get more income. Either way, we can help them out. No tax returns at all. We simply use their last 12 bank statements to determine a debt to income ratio of 40% in our example here, using just their cash in the bank. So most of our self-employed borrowers qualify for much more income. And these options are amazing. Best option today, 7% rate for a bank statement option, 1.675 discount point of the cost. That's the final APR, 7.332, just a touch above conventional to use bank statements. So amazing option for our borrowers out there that need a little bit of extra help. And if we scroll down here, there's hundreds of variations of these programs. Some of these may allow different ways to calculate the income. Some of these may allow various credit issues, all kinds of different options. Please get with our team to find the best ones. And for our final couple demos, we always want to show some pricing for investors. So investment property here, we'll set up the same loan amount, $400,000. We'll set up the LTV again to 80% loan, 20% down payment. And we'll search for the lowest rates we can offer for conforming conventional, and then we'll compare that to our non-QM options. Remember, government programs, FHA, VA, USDA do not work for investors. So we'll simply stick to these two options. Starting with conforming conventional, keep everything the same as all our other demos. All we've changed here is the occupancy to investment. So let's check these out this morning. All right, so best option here at the top, 7% rate, 3.5 discount points and cost, puts the final APR at 7.419 for an investment property here. So a great option for our customers that want to use full doc conventional loans, but definitely recommend our investors check out our other options. In particular, our favorite non-QM option, which we'll pull up now. So first we'll set expanded guidelines, also known as non-QM, for investment properties. And our most popular loan program here at the Mortgage Calculator is going to be our DSCR option. That's because it doesn't require any income or employment info. We simply use the estimated rents from the rental property to determine a DSCR value. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher. We use 1.5 for the demo here so we can see all the different programs. Finally, a prepayment penalty is standard on these programs. We always typically use a 3-year for our demo. That's the most common. There are options for no prepay, which you've seen in some of the other live demos. It does cost a little bit more. So usually recommend our borrowers take advantage of the other options. And there's some programs that allow 5 years, which does lower the rates a little bit. Most common is 3 years. That's what we always use here for our live demo. So let's check the options out today. Awesome. Best option today for a DSCR program, 7% rate, 3.275 discount points, final APR 7.502, just a touch above conventional. Most investors will take a DSCR option, even when it's much higher than conventional. We were beating conventional just recently, but we're right there, the same as conventional full doc. I'd say 99.9% of investors would still take a DSCR loan because no income, no employment, much easier qualifications, and you can do 1, 2, 5, 10 loans at a time because, again, no income or employment info needed. And if we scroll down, there's hundreds of options here. Some of these may allow different credit events, bankruptcies, foreclosures. Some of these at higher rates and costs. Some of these may allow different types of properties. All kinds of flexibility once we get into the non-QM and DSCR options. So please get with our team to find which of the hundreds of options work best. Now let me go ahead and switch my screen. And we're going to get into Jose's deep dive topic today for asset utilization. A little hard for me to click the buttons there on the screen and present the asset utilization because they do vary a little bit from program to program, a little less standardized than the bank statement option. So thankfully, Jose is going to be able to present all of the different ways we can take advantage of these programs. Every investor has a different way to calculate the income that we use on these loans, right? So it's a little bit hard to talk about them in general, but Jose has some very specific examples that we can talk about and give some examples of how we would calculate that income if you could, Jose.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Asset utilization is a very interesting type of loan because it essentially uses the borrower's liquid assets to qualify to be used as income and qualify the borrower. Now, I will state, as is the case for non-QM, all non-QM guidelines are different, so there is not one set asset utilization or asset depletion formula. They all do vary from investor to investor, including the percentage of the asset you can use, how long you have to have held that asset before it can be used. Everything is specific to the guidelines. Now, one other thing I wanted to state about asset utilization is that it can be used as a standalone income, or it can also be used to add income to the loan. In other words, you could have a W 2 borrower also using asset utilization to help qualify, or you can have any type of income borrower basically use asset utilization as an additional income stream to help qualify for the loan. So let me get into the options that I have for you today using asset utilization as income. So, as is the case on all non-QM, 90% LTV is the maximum LTV. Never any mortgage insurance applicable on any non-QM loan. So here we have our top or highest LTV option for a primary purchase, and we are at 9.375, almost at par. And you can buy that down all the way to 8.125 for our 90% max LTV option. So now 85%. So you can see how the rate does get better as you lower the LTV. Here now we are at 8.249, almost at par. And you can buy that down all the way to 7.249. And now at 80% LTV, which is the standard LTV, more traditional. Oh, I think we have a typo here. So we'll go on to the next one. Asset utilization, 85% LTV investment property. We are at 8.749 is our lowest cost option. And this is with a 3-year prepayment penalty on these investment properties. And you can buy that down all the way to 7.249 at 85% LTV. And now our 80% LTV asset utilization purchase investment property, and look at those rates. Wow. 7.99 is our lowest cost option, almost at par. And you can buy that down to 6.75% for investment property, 80% asset utilization purchase. And now our last two examples here are cash out refis. Now I will state 80% LTV is the maximum LTV for a cash out refi using asset utilization. Maximum LTV for either primary or investments. So for a primary cash out, we have 8.874 is our lowest cost option, almost at par. And you can buy that down to 7.249, lowest rate option for a primary cash out. And now our last example here is our investment cash out. Like I mentioned, 80% is the maximum LTV for both primary and investment. And we have 8.874 at par, and you can buy that down 7.249. So very good options here for primary and investment properties using asset utilization.
All right. I don't see any questions at the moment. Pretty crazy loan though, Jose, right? You're telling me if I just have money in the bank, I can get a loan?
Basically, yep. And the
Doesn't even
beautiful
have to
thing
be in the
about
bank. It could be a retirement account or something, right? So
Yep. Yeah, they would just do a little bit of an adjustment if it's a less liquid account. So the more liquid the accounts, they'll let you use 100% of the asset to qualify. The less liquid, they'll usually do an adjustment, 70%, 60%, depending on the type of account that it is.
All right. So still no questions. So I guess we can wrap it up. But a great topic here for today. Great tool to use. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into different loan topics. So we'll have a new topic here for you tomorrow. We appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rate.